Hello there, and welcome to the Fintech Times presents our first webinar. I'm very pleased to have you all joining us today, and we're going to be talking about a very interesting subject, something very topical and relevant at this moment in time, which is going to be, can Fintechs save the UK economy by funding small businesses? We're really pleased to have a large number of panelists with me, but just wanted to introduce the Fintech Times for those of you who don't know us. We were established in 2016. It's a global multimedia news outlet centered around the world's first leading fintech newspaper. So what we look to do is actually comment and curate the fintech industry for the whole of the financial services industry. So today, if you want to look a little bit more information up about us, you can check us out on the fintechtimes.com and obviously follow us on Twitter at the Fintech Times. For today, we're going to be using the hashtag FintechSavesUK. So please join the debate and the conversation is going on. Just as a couple of little housekeeping points, we are going to be running some Q&As today. So I can see we've got a large number of attendees already with us now. So please start sending through your questions and answers for the panel now and as the panel goes through our conversation. We will be saving some time towards the end of the panel to answer all those questions. So really, I don't really want to take too much time up by talking about myself. So I'm going to start bringing our panelists onto the screen. Our first panelist is going to be Katrine. So here we have Katrine with us here. So Katrine, could you just, for the audience, give us your full name, title, and the company you're working with, please?
Yeah, I'm Katrin Herling. I'm the CEO and co-founder of Funding Exchange.
Fantastic, welcome on board. So for our second panelist, I'm going to also ask Simon to join us on the call here. And thank you very much, Simon. Perhaps if you could also just introduce yourself to the audience.
Yep, good morning everybody. My name's Simon Currid and I'm the CEO of Funding Options.
Fantastic, thank you very much. And then we have our final panelist today, which is John. Perhaps John, you could introduce yourself also.
Good morning, everybody. So I'm John Davis. So I'm here today as the chair of the Association of Alternative Business Finance, and also in my capacity as founder of fintech lender Just Cashflow PLC.
Fantastic. It's an absolute pleasure to have you all on board. Unfortunately, we do have one panelist that wasn't able to make it today, which was Dr. Oliver Prill from Tide. Hopefully, the situation is not too much of a problem for him, and he'll be able to join us on future webinars. I've got a couple of quotes for him which I'll probably throw into the conversation as we go along, just so that he has a presence of being here even without being here. So virtually virtual, amazing. So really, to sort of start off, obviously there has been an awful lot going on, especially in the business world, in the whole world. And really what we wanted to start with was the government business interruption loan scheme. So obviously the Chancellor came out with a loan package totaling £330 billion to support businesses through this period. And obviously this was going to be distributed and administered through the British Business Bank, through their accredited lenders network, of which there is around 40. Now, obviously at the time, it was very obvious when it was first launched that there were no fintech companies or things that you could describe as fintech companies in there. Now, we don't want this to be a government bashing session, because actually putting aside any sort of money is very, very helpful for the government, and we really do appreciate what they're trying to do. What we're trying to figure out is actually ways that we can actually help them and how we can do that. And it's interesting to say, I think the British Business Bank on the 2nd of April announced that in the first 2 weeks of the scheme going live, it had lent £90.5 million. Now that sounds like a lot of money, but actually that equates to 0.027% of that whole entire budget. So it's probably fair to say that there needs to be some changes, and there needs to be a way to actually get that finance out into the places that need it. And that's kind of the subject of what we're talking to today. So what I was first going to do is maybe move to Katrin first of all, and just say, what's your reaction to that?
Yeah, so first of all, I absolutely agree with you that the support from the government and the very swift action is absolutely appreciated by everyone. The BBB and the 40 lenders that are part of the current scheme have worked incredibly hard to bring solutions to market. I think there's 3 points though that I would make around the current scheme. The first one is the design target. The design target of the scheme, because it's modeled on a previous guarantee scheme that was for larger lending, actually doesn't meet the needs of the market. 70% of bank referrals, customers who are getting declined by banks, want less than £15,000. The amount of funding that is required right now by individual businesses is relatively small. The way that scheme is designed, it is not suitable for that purpose. So further changes need to be made to make it suitable for smaller loans. The second is there are obvious points of failure. Obvious points of failure clearly where lenders are reliant on people and people are out. That is causing points of failure in terms of delivery. We've seen this, for example, with Barclays shutting down call centers in India in response to the lockout that is currently going on in India, and thereby call center capacity coming offline. The result of that is that sub £25,000 lending is currently not made possible by Barclays. So clearly obvious point of failure there is you're relying on non-digital processes to try and process in a crisis where people are displaced. And the last one is unintended consequences. The design of the scheme, which I think is trying to keep interests of businesses at heart, is asking for non-personal guarantees, for no personal guarantees for sub £250,000 lending. That is, I think, a fantastic proposition to businesses. However, from a lender's perspective, prudential risk remains prudential risk. So if 20% of your portfolio is at risk and you have a large portfolio, then that actually influences your lending decisions quite significant. And here, the unintended consequences, yes, you want to do the right thing for businesses, but actually what you're doing is you're holding back many lenders from making positive lending decisions because of the residual risk exposure that they have.
Interesting, very interesting points. And Simon, I know some statistics that Funding Options released recently that in March, I think 10,000 businesses requested loans that were actually outside of the government's coronavirus business interruption scheme. So what's your take on the situation?
So I echo Katrin's points. All of those are absolutely valid. I think there's one that I would call out and accentuate a little bit further, and that's the lender inclusion aspect. So CBILS is, as Katrin mentioned, it's a derivative of the old EFG scheme, which I'm sure a lot of people in the market would have a view on, prior to CBILS actually coming into effect. But for me, the biggest issue that we're seeing is the fact that CBILS or CBILS, whatever you want to call it, it has effectively excluded the alternative lenders. And it's my view that over the last 10 to 12 years, since the previous global financial crisis, that the alternative lenders, they are the ones that have propped up SME lending here in the UK, and I'm sure globally as well. And I think, again, to Katrin's point around, the design target being for larger lending, I think that's absolutely true. And if you look at the S and maybe the M of the S,
right,
rookie error, John, rookie error.
Absolutely.
I won't hold it against you. If you look at the S and the M of the SME population, from our perspective at Funding Options, they're the ones that have been impacted most in this situation, and they are the businesses that are struggling to find access to finance. And we're working incessantly with all of our lender partners. We deal with all of the main banks, the neos, the challengers, and all of the alternative lenders. We're trying to get the alternative lenders included in whatever support framework that we can succeed. But at the moment, I think it's fair to say that alternative lenders have been excluded, and that is significantly to the detriment of the economy.
Okay. It's very interesting. Now, John, you've been quite vocal over the last few weeks, so I hope you're not going to disappoint. What's your take on this this area?
Okay, let's start with the basics. There's a lot of miscommunication generally and misunderstanding in any event. So let's be clear, when the government said there was 320 billion available to lend, it didn't actually give anybody any money. So therefore, there's no pot of money you can tap into. So we as a commercial lender would have to lend our own money, and having loaned our own money, then if it was met the criteria, we could be eligible for 80% of that money to be guaranteed from the government if we were part of the scheme. So you've already seen 5 or 6 lenders pull out of the scheme because, again, they don't have the liquidity to do that. The truth of the matter is it's only the major high streets who have the liquidity to do that. So for fintech to be involved, it can be involved in a number of ways. So in the last 2 or 3 weeks, we're working with Innovate Finance, Finance Leasing Association, UK Finance, CBI, trying to get a uniform proposition to government. And the key issues are, one, CBIL does not work for 1.6 million micro businesses. It just doesn't. If you look at the rules, everybody's shouting at the banks, but the reality is the rules they have to lend to say that company they're lending to, A, had to be very profitable towards the end of 2019, and also can sustain profitability post-COVID, and also support the loan as well. Now, in addition to that, the whole process of applying with the cash flow forecast, P&L forecast, balance sheet forecast, and a host of other things means it's a totally huge documented process. So the challenges for the fintech sector is, number one, how do we get liquidity? Because if we could access liquidity, then absolutely we could be a feature, a part of that particular scheme. But also, CBIL itself needs to alter. There needs to be a CBIL, what we call Mark II. So this morning we put in front of John Glenn, who is the Economic Secretary for Treasury, a proposal for a CBIL Mark II that fits the profile of 1.6 million micro businesses, because those micro businesses are not going to have a finance director in the main. They're not going to have a balance sheet or all the things they can prove. Also, one of the big things missing, they're not going to have a relationship manager. If your turnover is less than £2 million, you don't have a relationship manager anymore. You have someone in a call center. And as Catherine said, as in Barclays' case, they closed down the call center. They've also got their own issues with incubation and all those things as well. So therefore, you can't get to speak to anybody. So if of the UK population of businesses, 1.6 million businesses, half of them needed to speak to somebody about some form of support and help, that's 800,000 businesses. Only 2,000 businesses after last night had received any form of support in any event. So therefore, clearly there is a logistical issue. So where does fintech come into all this? So number one, if we could organize a fund from British Business Bank, which we proposed to them as well through EY, if we have a fast track approval system for fintech lenders, which is also now being picked up by Stephen Jones of UK Finance, and that's been put in front of BBB as well. We suggested that there ought to be sort of the big four, along with the FLA, UK Finance, actually creating some sort of fast track process, and also then doing checks and balances around that. So if that was the case, then we would have the funds to be able to do that. We could get into the fast track process and qualify. And if we change the rules about CBIL lending, say along the lines of, okay, could the business show growth, or do they employ anybody? In other words, a much watered down version of CBIL, then absolutely fintech has a huge role to play. And we also suggested very quickly that both Catherine and Simon's business are actively involved in this, because they were both approved under the bank referral scheme. So therefore that already sits in place, is a process in place. And if therefore they allowed all of the banks to push back into those platforms, likewise the BBB could signpost into those platforms as well, then when those applications came through, lenders, fintech lenders on a rotation basis could then decide whether they would lend under CBILS Mark II or lend their own funds based upon other liquidity that they have. So trying to get it all in one go, but that's what it is. So fintech absolutely has a part to play, but government has a part to play as well. It's got to put the money up to do that right now. Otherwise, none of us have a part to play in this.
100% agree with you. I was just going to pick up on one of the points you said about the referral scheme, of which Katrin and Simon are both part of.
Yeah.
Katrin, with that referral scheme, have you seen an increase in requests through that scheme? And how are you actually able to sort of help those companies when potentially your lending pool is drying up as well?
Yeah, I think those are two very relevant questions. We've been watching quite carefully what happens to the both the volume of referrals from banks as well as the quality of referrals, because we see this as indicators around how healthy their credit decisioning actually is and how well it's functioning. Now, if you understand that some of the banks have seen a 40x increase in volume of applications, you would have expected the volume of exhaust from the credit process to increase as well. That hasn't happened. So the volume of referrals is up possibly 1.5x to 2x. It's still quite volatile, but it has not significantly shifted from pre-March 14th to today. And what this indicates, if banks have a 40x increase in applications, but there's no credit decisions being made at the back end, that there's a huge number of applications that are sitting with the banks that are not being processed. And this comes back to the point that John was making around the cumbersome process for applying. Most of the banks have, because of the requirements of the scheme, cumbersome offline processes to capture huge amounts of information. Now, this is shifting because the BBB recognizes, and it is a learning exercise for them as well. So the requirements for sub 30K lending are being reduced to make the processes more effective. But nonetheless, there's still offline reporting and offline processes required that are essentially reducing the effectiveness of systems that are in place in good times. In bad times where people are displaced, it's causing a backlog of humongous proportions. And I'm sure Simon will have heard the same thing. We hear this from our customers. They just don't even get a call back from the banks because there's just nobody there who can actually process these applications. So unless you have a relationship manager, you are almost inevitably not progressing with your application. So that's point one. Point two is you're asking about, is there still funding available for these customers? And you're absolutely right that those who are in the most dire need of funding right now, whether it's the retail sector or it's accommodation or hospitality, these are the sectors that find it incredibly hard to access commercial finance right now. Most of the lenders who are providing commercial solutions outside of CBILS would not be looking at this type of profile at this point in time. There's still lending happening. There's still lenders who are taking new requests and assessing them and unlocking finance. And we've seen this both in the larger volume requests as well as smaller volume requests. But those who are in most dire need of finance aren't able to get the commercial solutions they're looking for. And therefore, absolutely, I think we all probably on this panel agree that the support that the government has extended to those 40 lenders, of which, if you look at the list of 40, there's probably only 10 who actually do have balance sheet lending capabilities. So ultimately, CBILS is currently constricted to about 10 lenders, many of them non-digital, reliant on offline operational processes. And I would echo the call for, and I know the British Business Bank is working towards this goal, but the accreditation of digital lenders in particular, and those who've been less affected by the displacement of staff and can cope with processes at scale, to be able to help those businesses that are currently unable to access Barclays Finance or HSBC Finance and are looking for alternative solutions outside of their main banks.
It's really interesting. I think coming to you, Simon, if I can for a moment, as we mentioned earlier, you know, in March, 10,000 businesses requested loans via your platform, and these weren't even anything to do with the coronavirus. Do you think there's a sort of perception within the business community that Catherine spoke about, that they just don't think they're eligible for that support anyway, and so they're looking for these alternative methods?
So I think just to clear up maybe a bit of confusion there. So, you know, 10,000 businesses, more than £1 billion worth of lending requested in March. You know, those statistics are absolutely bang on the money. That's what we saw. But I think, let's be clear, that was largely in response to the impact of coronavirus on the economy in general. We're all feeling the impacts, whether you're large, small, and it doesn't really matter what sector you're in, apart from maybe a couple of very, very specific sectors. Everybody is feeling the impact. From my perspective, the biggest challenge, so £1 billion worth of lending requested. How does one satiate that demand? And how does one satiate that demand when you effectively have this CBILS scheme out there, which is very much bank focused? The alternative lenders, to John's point earlier, they don't have, they're very restricted in terms of what they can do. They don't necessarily have the access to capital that the banks do, or they definitely don't have the same level of access to capital. They don't have the government sort of guarantees sitting behind their loans. So we saw very, very quickly from March the 14th onwards, very, very quickly, our ability to place loan applications with our more traditional lenders, and our traditional lenders would be the Fintechs, the alternative lenders. That's absolutely severely compromised. I mean, I'm very happy to be a bit more pointed about this. The title of this webinar is, can Fintechs save the UK economy? Well, yes, we can certainly give it a good go, but at the moment, we don't actually have an entry ticket. What I've been most impressed with is some of the innovation that I've seen, not necessarily from a lender perspective. I mean, the alternative lenders are doing what they can, but it's the other fintech partners, the likes of Kodak, Account Score. A number of these companies have a very, very significant role to play here. 11FS, there's a whole host of names that we'd all be very familiar with, who are doing some pretty awesome stuff behind the scenes to try and get some kind of fluidity into the processes that we're seeing, to try and change and disrupt, I guess, the more traditional flows that we see around SME lending. Just to try and give it a bit more oomph, give it a bit more sort of positivity. But at the moment, until the alternative lenders get the support that they need, we are going to be seriously compromised. And I personally believe that SME lending is probably at around anywhere between 10 and 20% of where it was a month ago. I mean, it is seriously hard for businesses out there today to get access to finance. Simple as that. Yeah,
it's a really difficult subject. Turning to you, John, just to reiterate a comment. So Chancellor Rishi Sunak, when he first announced this, he said, the coronavirus government pledges whatever it takes to help our businesses. What if there was one thing that you think they could do, what would it be, and how quickly should they do that?
It was the two things, which is create a fund that alternative lenders can access, because the challenge is liquidity. So very quickly, so as fintech lenders, we will be borrowing our funds from other parties. Those other parties right now are keen not to lend into the marketplace because they don't know themselves what's going to be happening in the future. So there's an instant liquidity issue. Therefore, we as fintech lenders across the board need to be able to access a fund. So a new fund needs to be created. We've put to the British Business Bank how to do that. We've clearly set out exactly how they could do it to make it easier for them, but they could do that. Again, could be managed by the Big Four along with one or two other organizations. So that's number one. And two, change the rule around CBIL if it's going to be a CBIL product. So therefore, it has to be a CBIL Mark II for those businesses that clearly don't meet the Mark I. Now, the big issue there, where everybody jumps up and down, is that there are going to have to be PGs involved. All fintech lenders in the main for working capital will require a PG from the director. Why? A, because they've got low credit profile, thin credit profile, they can show growth, they can to a number of things, but they lack all the normal criteria for a normal type of bank lend. So therefore, we rely heavily upon the directors confirming they believe in that business. So therefore, also as lenders, we will have back-to-back agreements where our supported lenders insist upon us taking security by way of PGs as well. So right now, even if we all got approved tomorrow morning, it's unlikely any of us would really lend any money because we'd be in breach of our own covenants with our own subordinate lenders. So new fund, new rules, relatively fun. Fund is easy to organise. That's not an issue. We've done it before. In terms of new rules, then agreeing what those rules would be, making sure they're clearly put out to everybody. So that again, then the fintech world can, with the fintech lenders between us, we must have over 500,000 small business customers. That's 30% of the universe. That's fair. And again, we all have the technology to process very quickly. So first of all, we can process our own customers, that's nice, and also we can process new customers, and then link to both Simon and Catherine in terms of being pointed towards. We have a reasonably good solution for the micro businesses, which is the vast majority, leaving the 2,000 or 257,000 bigger businesses, which employ more than 10 people, to deal with, will probably have a relationship with, which is the big 4, 5, 6 banks. That would be easier to administrate and easier to distribute kind of strategy.
I think that's absolutely spot on. It's interesting to think about the sort of speed at which those two things happen. As you said, starting a fund, I use the word simple with a sort of inverted commas around it. It's not simple, but it is relatively straightforward, has been done before. Right. The key area is really that sort of qualifying criteria and the new rules. Now, one of the things I would say as a positive of the government, although it does, I'm sure, feel for a lot of people that are furloughing employees, that the scheme with HMRC to actually get the application and the approval process in place, for me, to get that up and running by the end of April, which is around 2 months, is actually completely unheard of within government. That speed to actually get something sorted, although it's not quick enough, and we all appreciate it's still not quick enough. So they have shown that they can do this and they can mobilize that if they need to. So I think that's kind of a big sort of.
Well, they make the sound bites. Make it sound. Sorry, just to jump in.
Please do.
See, let's understand the whole thing of furloughing staff. You're not going to get your money from the government till probably May. So therefore, you're going to have to pay your salaries at the end of this month. From what specifically? So you furloughed all your staff, but you still have to pay the 100% bill up front before you can claim back. Exactly. Same as you took on the grants in terms of rates, grants, etc. So what the rates council did, they took the first payment off you this month, as they would normally. Then now, but you've got to wait another month, hopefully, funded right to you to possibly allow you to have a grant. Yeah. There's a huge amount of confusion around that because they're going to write it to you first. So what happens if you're not in work to pick up your mail? Interesting question. So again, they're great sound bites, but people aren't necessarily looking practically, how do you do that? Could fintech deliver that solution? Of course it could. Yeah. But no, they'd rather rely upon a letter. Who relies upon letters these days? You know, so it just gives you some idea of the thinking on the processes just aren't joined up somewhere. Yeah. The challenge you've got is small businesses do not have a whole bunch of working capital sitting behind them. They don't have reserves. They are literally hand to mouth. Some or other, people have got to pay their staff this month, or they don't get paid their mortgages, pay their rent, or buy their food. So something needs to happen rather quicker than what it is currently.
Absolutely. I'm just going to say to our audience that obviously start getting your questions in, because we're coming close to sort of getting into the Q&A sort of time. So I was just going to sort of start my sort of element of question with a final question, perhaps to Catherine first. So if the government does nothing more and nothing else changes with the government, what can fintech do to save our small businesses?
Well, it's a very hypothetical question. I think the way government is currently operating is that they're putting the first solutions in place and then they're iterating to learn based on what isn't working. And given the speed with which they're acting, I think this iterative process will be followed. There's absolutely no question in my mind that we will continue to see changes specifically to CBILS. Potentially to the way the grant schemes are delivered. And I think, John, your point is well made, that the initial view on process execution probably was not a viable one if you understand how a business actually works. And to reiterate John's point, 20% of all businesses will run out of money in April. 20%. 50% of all business only have cash flow for 8 weeks. So there's a huge wave of businesses coming that will require access to funding. There's already a lot of activity in terms of the orchestration of how fintech, and John has referenced some of these activities, how fintech can collaborate with government, with banks, with other stakeholders in the environment to actually put digital solutions in place that deliver a much speedier access to funding, whether that's through loans or grants or other instruments. It almost doesn't matter. But I think all of that collaboration and the working together in terms of identifying the challenges and putting solutions together, that is what's required. I don't think this is one where fintech needs to stand in a corner by itself and try and come up and think up new solutions. It's about us as players in an ecosystem to collaborate to the greater benefit of keeping the UK economy alive. And for us particularly, this means, for us as funding exchange, this means using some of the digital technology that we have to help our partners bridge some of the constraints that they've seen as processes have gone offline, and using creatively things that we do very well to help them bridge some of the barriers that they're encountering. And so in a way, collaboration in my mind is the answer to your question, rather than trying to think up what fintech by itself can do.
Thank you.
Yeah, absolutely. Did you want to make a comment against that, John, as well? You talked quite a bit in the press around sort of the whole of fintech coming together.
But sure, again, simple things is that, as Simon mentioned, other fintech, not lenders, but part of that ecosystem, and we all know them. Yesterday, Barclays told one lender it now required an additional £2 million bond if they were to carry on processing their direct debits. I mean, wow. I mean, how wholly unhelpful is that? We've also got banks right now telling borrowers on the CBIL, we'll lend you the money on a condition that you don't pay any other lenders. Where does that fit in the overall scheme of we're all in this together then? And we have that evidence all over the place. So how are they allowed to do that? So I think what we will see from business point of view is a realization that the banks, truly aren't really there for them. And yet, the fintech industry does all it can to help, support, move. We're all communicating with our customers. We have ways of communicating. But what's also interesting is that government doesn't actually, I think, truly understand what fintech does have to offer, or what it can do. Because I think the people at the very top actually don't get it. So I think for us as an industry, so therefore as everybody in payments, I sit as the Deputy Chairman of the Emerging Payments Association. So in that sector, we increased the contactless from £30 to £45. There's a whole industry out there all trying to find ways to make it easier for businesses and consumers to get through this. And I'm hoping that post COVID-19, actually, we can all between us start making some proper sort of representations to government and other bodies, just of how we behaved versus others and what solutions we provided versus others. And I think that, if there's going to be any good out of this, is that perhaps people do realize, just as innovators, what innovation we are bringing to everybody's lives on a daily basis.
Yeah, I 100% agree with that. So I'm going to take a couple of questions from the audience. I'm going to direct this one to Simon to start with. Been asked, with fintech lenders like balance sheets, do we foresee any becoming insolvent?
I would say that everybody across the ecosystem is feeling the pain. And just quickly, I will answer the question directly, but just quickly tuning into what John was saying there. I think, this is definitely not about bashing anybody about the decisions that have been made so far for funding options. We would like to see the fintech community recognised for the role that it plays in any future consultation by the government, BBB, the Bank of England, whichever body it is. I think there needs to be absolute recognition that we have a significant role to play in this sector and in this industry. So I really hope that there are some learnings. And I think those learnings need to be made quickly, not before the end of COVID-19, because let's be realistic, it could take months for this, for the true impact to actually manifest itself, into reality. And there could yet be a few curveballs down the line. But going back to your question, look, yes, potentially, with all of the restrictions that are being placed on the alternative lenders, the lack of support, not having access to capital, credit lines being either pulled or tightened, and other requirements, such as the one that John, the example John threw out there, the alternative lenders are going to be feeling the pain. There could be potential consolidation, and yes, there could be one or two that unfortunately face some pretty difficult situations. It's definitely not what we want to see, and that's why everybody is coming together across the community and within the fintech sector to try and get our voice heard. And I think it will be. There is progress being made, so we are still very positive, but we are by no means out of the woods yet.
I just pick that up very quickly. Sorry. In addition, as I said, we fight for not just our own members, but fight for the whole fintech lending community. So as of this today, we have a proposal from Innovative Finance, UK Finance ourselves with EY going to the British Bank for what's called a forbearance fund. That forbearance fund allows fintech lenders to be able to give interest holidays or capital holidays for 3 to 4 months, and then be able to borrow a soft loan to be able to cover those payments in that time. So that doesn't stop somebody becoming insolvent or similar, but it allows them to stay in business on their previous model by using a soft loan to be able to give those forbearances to their customers. So again, it's something that's been identified, and therefore hopefully we'll have a resolve and a solution to that within the next 10 days around that. So that would fit all lenders right across the screen, where they've had to, as consumer as well as business, where they've had to give forbearance payments to their customers.
Mark, if I can add just 2 seconds. I think it's absolutely right that the fintech community has to stand together and try and develop solutions. I think the point that I think has to be, the perspective that we have to take is actually also what do we do to protect the businesses. And I think this is one where we can't just look inward in terms of offering capabilities and offering ability to process, etc., etc. But actually, I think one point that is getting lost in the broader discussion, not today, but in the broader discussion, is actually the risk that we are exposing our businesses to. And yes, we are focused on they don't have access to finance, but actually there's a secondary level of risk because it's become so difficult to access finance, that you are opening up the opportunities to defraud businesses, to ill-serve them with products that are not suitable for them. That you are actually, what we've seen is the emergence of charges for access to finance that don't seem justified in terms of the promises that are being made to small businesses. So one point that I would love for the fintech community to take and endorse more strongly is actually the ability for us to rally together to protect the businesses from where they are in a very difficult situation and are looking for solutions. And in the current world, it is very hard for the business to distinguish between what really is a good solution for them and what will help them, and what is actually an attempt to take advantage of them. And I think there's more to be done in terms of standing together as the fintech community to say we are actually going to help and protect those businesses, and we're going to be transparent, and we're going to ultimately recognize that these are in many cases consumers that should have long time ago been extended the same type of protections as the FCA extends to every single consumer. Being treated fairly should be the right of every single business.
Yeah, I think so. It's raising on to that point about everyone sort of coming together. There's quite a few questions that have come in, and they're all loosely linked around the same thing. What does that combining of the ecosystem look like? You know, if you've got some, we talking a ginormous COVID-19 marketplace that everyone pitches in on, or what sort of would the vision you think be of being able to get everyone together? Maybe ask John to start off the answering of that sort of one. Well,
I mean, Fintech Times is got to start.
Well, great answer. Well done, John. I shall pay the £5 later.
I've done these before. Well, again, I can only speak specifically in our own sector, but so right now, you know, I'm on a call in the last few days with Christoph from iWalker, with David from Capital on Tap, Simon I know well. So there are a number of us now who otherwise previously wouldn't have spoken to each other, but now are, and trying to find solutions to help each other as well. And again, I've got a call with EY at 1 o'clock today where I'm saying this is great as proposals, but that really only serves the topic. How do we serve the rest as well? And so I think, you know, there are champions. I think Charlotte at is doing a really good job of fighting on behalf, just to single her out. So again, it is, you know, like all these things, is the more we all talk to each other and try and share, we can't create a even marketplace for everybody because we're in the commercial world. However, I think if we do try and look out for one another and try and point to one another, and people of my age, because I'm obviously much older than everybody else, just trying to pass things down, saying, look, watch out for this or be careful of that, because we've seen it before. This is not my first, you know, going through recession. I've done 3 previously, you know, back in 2008, back in the 90s when we had the property issues, back before that in the 80s. So these things tend to come around. So if we can share with people, like I said, Catherine said, everybody should have the right to be treated fairly. Absolutely should have the right to be treated fairly. You know, that should be a common thing. And there's enough knowledge between all of us to try and give everybody a helping hand in some way. So and then I think if we just try and learn something from COVID, which is let's try and help one another and be less selfish, perhaps.
Yeah.
Mark, can I add something to that? If there are a number of questions linked to this, I mean, this is, you know, my view on that particular question is, I think that the likes of funding options and funding exchange in particular, as if you want to call us fintech aggregators, we have a very unique position in the market. We sit between the businesses on the one side and the lender community on the other, and we are absolutely bang center between the two. The abilities that we have through technology and through subject matter expertise through our people, I actually think that we are the best placed to be able to distribute, or rather filter the needs of the businesses on the one side and distribute appropriately to the broader lender community, be it banks, be it alternative lenders. We have that capability better than anybody. So I actually think that we have a very, very significant role to play here. As you mentioned the statistics previously, more than £1 billion worth of loans came through funding options in March alone, and it was actually a lot more than that. You know, the amount of filtering, triage, customer liaison, distribution to the lenders that we did in March was incredible. The challenge we had was that all of the lenders were busy changing their criteria day in, day out. Risk appetites changed, people were pulling out of sectors. Some lenders pulled certain products wholesale, some lenders pulled out of the lending market entirely. So we were dealing with a situation that literally was changing by the hour. So it's that distribution, finding homes, suitable homes for access to funding for businesses was hugely challenged. We're still here. So we're still organising finance on behalf of SMEs. We've had some great success stories. We've heard a lot of horror stories, but we're still here. The technology is there. The people are there. The demand is certainly there. The lenders are ready if we can organise a solution whereby they can continue to lend and maybe even increase lending. But we need that support in particular behind the lenders. But I see the likes of the fintech aggregators and our partners as being critical in the ecosystem to allowing us to distribute funds to SMEs quickest. Without us, it is not going to happen. What's happening right now is you basically said, here's CBILS, and you've got all the businesses going in individually to these lenders. There's no filtering, there's a mass confusion. It does not work, which is why you're hearing the horror stories. That should be channeled through companies like ours who have the expertise. This is what we do for a living, day in, day out. We're ready for it, but we're just heavily compromised right now.
That's a valid point. So we're just going to really, you know, we've come to the end of our time. We've run a little bit over, which it was inevitable. This was always going to happen. We could talk for hours on this subject. Perhaps we'll just go round the panel and just have a, you know, final thoughts and final word, just a sort of a quick summary, and you know, think about if the government was watching now, what would you say? if you go to Katrin, please, first.
Yeah, so we have been providing live market data into the government. So actually, we feel quite privileged that because of the live access to data we have, that government is actually listening to some of the feedback. I think the key message that we're giving to the government is the banks are challenged by the dislocation. You need to think about how you're actually creating digital processes that gets money out to people who will fail if they do not have the access to money. And do not think about this in terms of hundreds of thousands of pounds. 70% of funding requests from businesses that have been turned down by banks are for less than £15,000. So if you want to support the large chunk of businesses that have less than 10 employees in the UK, more than 90% of businesses, you have to solve for the bottom end and not those guys who have RMs and are being able to call the RM at midnight and ask for an extension to a £1 million loan. That's not the problem. The problem is the smaller businesses that, as John was saying, do not have the cash to actually make critical payments to keep going.
Lovely, thank you. And John, final couple of words from you.
Again, I think we're all saying the same thing. But what is good is that, again, we've collectively come together. We are making sensible proposals to government, which they can execute. So therefore, the key with government is not to give them something they can't do, because if they can't do it, then they fall into state aid or similar, never going to make decisions. So what we've tried to do is say, look, you've already got this structure, you've already got a bank referral scheme, use that. You've already got the ability to set up a fund, use that. You've got all these things, so therefore execute on them. So there's nothing we've asked that is out of their range or out of their comfort zone at all. They just need to make decisions, and that's the key, because time is running out rather rapidly.
Thank you. And Simon, finally from yourself.
So I remain very positive. I am an optimist, and we've seen lots of twists and turns over the last 2 to 3 weeks, and I know there will be a number of other twists and turns. So I'm positive that a solution will be found, and that there will be iterations and refinements that will get us to where we need to be. If I could sort of get a message directly to the government, for me it would be, bring us into the fold, listen to us, and let us help.
Fantastic, very clear and concise. Thank you so much for all of you giving up your precious time to speak with us today. We very much appreciate that. To our attendees, thank you very much for joining us and for the questions that you posed.
Why don't we do this on a weekly basis so that everybody understands what's happening?
Yes, maybe.
I
show of hands in the post-webinar survey, I'll ask the question, John, if everyone wants to hear from you on a weekly basis.
Just to be clear, CBI, we do 2 calls a day with the CBI. There is a lot of stuff changing overnight, and the challenge is cutting through all of the fake news and what is really happening. And, you know, as I said, it's a very, very quick moving feast right now.
Yeah, and I don't know, for my other colleagues on the phone, as a business owner myself, there is obviously wanting to talk about things and wanting to get messages out, but we also still have businesses that we're running ourselves, which we need to put on for our employees and our staff and our investors as well. So well, let's hope that we can all carry with that. So thank you all very much for participating. Thank you to the audience. Follow the information in the news, obviously on the fintechtimes.com, and us on Twitter at the Fintech Times. And let's try and make the hashtag FintechSaveUK an actual reality. Thank you all very much for your time.
Great, thank you.
Thanks, Mark.
Thank you.